Welcome back to Finance Professor. Today we're comparing secured and unsecured credit cards, what they are, how they work, and which one you should actually use. So let's start with the basics. As we've covered in a previous video, there are two main types of credit cards. There's secured and there's unsecured. The biggest difference between them comes down to one thing, and that's risk. A secured credit card requires a deposit up front. That security is for the bank, and that deposit acts usually as your credit limit. So, if you put down $300, your credit limit is usually $300. So why do banks do this? They do it because it reduces their risk. If you don't pay your bill, they can use your deposit to cover the balance. Now, because of that, secured cards are easier to get approved for. They're great for people with no credit or bad credit, and it's perfect for rebuilding credit. So here's the important part. Even though it's secured, it still works like a regular credit card. That means that your payments are reported to the credit bureaus each month, and you can build your credit score over time. And yes, this still builds your credit just like a normal credit card. An unsecured card does not require a deposit. Instead, the bank decides your credit limit based on your credit score, your income, and your overall financial profile. Because there's no deposit, the bank is taking more risk. So they're more selective about approvals because this is where the bank is just trusting you. Now, unsecured cards typically offer higher credit limits. They have lower fees if you have good credit. And a lot of times they'll offer rewards like cash back or travel points. But they are harder to qualify for if you're just starting out or if you're trying to rebuild your credit. So here's a simple way to think about this. Secured is you provide security, which is a deposit. Unsecured, the bank trusts you based on your history. So which one should you choose? If you're just starting out, you have no credit history, or if you're rebuilding after a couple of mistakes, then a secured card is usually the best choice. If you already have decent or good credit and you want rewards with higher limits, an unsecured card is likely the better option. So here's my pro tip. Many secured cards allowed you to graduate to an unsecured card after a period of responsible use. You want to check before you apply because not all of the cards do this. What that means is you would get your deposit back and your account would continue building history. You get to keep all that history instead of closing down a secured card to start a new unsecured card. So that's a really big bonus and really important if you're looking at rebuilding. That'll add a little bit of history and keep the same card going instead of starting and stopping and going again. So think of the secured card as a stepping stone. It's not a permanent solution. Now, understanding the difference between secured and unsecured credit cards can help you choose the right tool for your situation and help you build your credit the smart way. So in the next video, we'll walk through how to read your credit report step by step. I hope to see you there, and if you like this video or my previous ones, please like and subscribe. Thank you.